Hello, everyone, and welcome back to Nonprofit Auditor Points. I'm Irina Oshkova, and I'm your nonprofit auditor. And we continue in 990 series, where we're discussing very common, typical mistakes and misunderstanding of the Form 990s. In a previous episode, we talked about compensation reporting and why Form 990 makes certain compensation public and it's not optional. Today, we're moving into another area of Form 990, which is very confusing and complex, but extremely important to the governance and planning perspective for nonprofits. That topic is a public support test, which is reported on Schedule A of Form 990. Before we're going to go into discussion of that topic, it is critically to clarify one thing. The public support test applies only to public charities which are 501c3 organizations. So if your organization is not 501c3, it does not apply. So you might skip this section, or you might want to learn about what public support test means and why the IRS is very carefully requires nonprofit to calculate it annually to make sure that public charities still meet 501c3 test. The organizations that are subject to that test, Schedule A is one of the most important schedules in entire Form 990. The purpose of the support test is pretty straightforward in a concept, even though mechanics are not easy. The IRS wants to confirm that the public charity is actually supported by public in general, rather than being dependent or controlled by the small group of private sources, private donors, because public charities are not private foundations. They are supposed to be supported by public in large. Public support test is measured as a percentage, and that percentage is what board members and management should concentrate on. There are two different methods for calculating public support on Schedule A, depending on how the organization is classified in Part 1 of Schedule A. Some organizations check box 7 and complete Part 2. Others check box 10 and complete Part 3. The calculations are different, and certain relief provisions, such as special circumstances test, apply only if the organization using Part 2. The details of the calculations belongs with the CPAs and tax preparers because it's quite complicated calculation. But leadership needs to understand which method applies and what is the result for rolling 5-year percentage. Again, I want to repeat, rolling 5-year percentage. What it means, that percentage is calculated based on the past 5 years. The rolling percentage is critical. Each year, the oldest year drops off and new year is added. The organization is not evaluated based on a single year in isolation, but on how its support looks over time. Again, looking in the past 5 years. In general terms, charities need to remain above roughly 1/3 or 33% to be supported by public in order to maintain its public charity status. When an organization percentage starts getting closer to the threshold, which is 33, it enters the risk zone that deserves attention by the leadership. That's where the understanding how different types of contributions are treated becomes very important. Once again, if the percentage gets closer to 33, that's time for leadership to analyze how revenue is treated for the purpose of the public support test. Not all contributions are treated the same for public support purposes. Grants, contributions received from domestic governments are considered public support and not subject to limitations in the public support calculation, so they can be fully used in that percentage. In the same way, grants and contributions received from others, 501c3 and other public charities, are also treated as a public support and not limited to the size, so the full amounts can be included in the public support test. On the other hand, contributions from individuals, business, and private foundations may be subject to limitation in the public support computation depending on the amount and other parameters. Large contributors from these sources can disproportionately affect the percentage, especially when the organizations relies heavily on a small number of big donors. This distinction leads to very practical governance takeaway. When the organization public support percent is tending downwards and approaching threshold, which is 33%, leadership should pay close attention to the mix of the funding sources, not to the total revenue. In many cases, improving or stabilizing public support is not about raising more money overall, it's about diversifying where the money comes from. Government funding and grants from public charities often play an important role in that strategy. Another very important category is understanding donor advised funds. Contributions received from donor advised funds are treated as a public support even when donor advised fund is funded by one single individual. That can improve your public support test. This is different from a direct contribution from the same individual because that might limit your public support calculation. It does not mean that your organization should push every donor donate through donor advised funds. But it does mean that the leadership should understand how donor advised funds contributions are treated when public support tests is calculated, and they can plan accordingly. Because of the public support tests using rolling 5-year window, one good governance practice is to maintain rolling schedule for major donors, especially donors who are not public charities. You want to make sure that those donations do not affect your public charity test too much, significantly. By looking at which year will drop out of the calculation in which year will be added, leadership can often anticipate changes in the public support percentage in advance. This will allow time to respond thoughtfully rather than reacting after the problem appears in the Form 990. For example, if a year with many small donors is about to drop out of the calculation and will be replaced with a year that was dominated by one large private donor, the percentage may decline significantly. If leadership sees that coming, they might have time to seek additional public support sources or diversify funding efforts. This is why public support tests should be viewed and reviewed responsibly and annually. When leadership understands the trends and mix of funding sources, there is usually plenty of time to adjust and avoid problems altogether. Schedule A is not just a compliance schedule. It's an early warning indicator for nonprofit to ensure that nonprofit does not look public charity status. In the next episode, we're going to move away from Schedule A to another area that frequently asked about. It's a financial reporting on the Form 990. Many organizations have audited or reviewed financial statement, and yet when they look at the Part 8, 9, and 10 of Form 990, the numbers that appear in Form 990s do not match to the audited or reviewed financial statements. We will talk about why that happens, what differences are expected and okay, and where the reconciliation is disclosed on the Form 990. Understanding those differences helps leadership read Form 990 correctly without assuming something is wrong. Thank you so much for being here and listening to our naps. Be safe and have a wonderful week.